What's going on, everyone? Happy Sunday. So as you know, I've basically predicted that we would have an 85 to 90% chance that we would bounce into Monday. I'm going to explain to you guys why the chances of that happening has fallen. And I'm also going to explain the next steps for what I think has to happen in the market for a proper relief rally. And of course, thank you so much for all of your likes, comments, subscribes. Really, really appreciate it. And without further ado, let's get right into the video. So here's a chart of the daily of the NASDAQ. On Friday, I predicted 4 different things were to happen. All 4 of them happened. Number 1, I said that we would gap down and retest at least between 2.5 to 3%. At that point is when we would begin to buy calls. Now, if you look at the, because this is really, really insane. So if you look at the exact percentage point, we fell exactly 2.5% before we began to bounce. So on the dot, there were some people in the Discord that bought calls as soon as 2.5% hit. We did. I didn't. I wanted to see if we would fall even lower, but then we ended up buying calls on the reversal. So not only did we go short at the open, as I predicted would happen, we would fall 2.5%. So we went short, played the downside, and then we bought calls on the way back up. So we played both ways absolutely perfectly. So those things worked out really, really well. So number 1, we would fall at least 2.5 to 3%. That happened. Number 2, that low within the first hour would have been the low for the day. And that was the case. Number 3, we would have bounced back up to the prior day's close at least. That also happened. And then number 4, we closed either slightly red or green. That also happened. So all 4 of these things happened on Friday, but I am still not as convinced that we will bounce into Monday. Yes, I am more bullishly long that we will have a gap up and a bit of a bounce Monday and Tuesday regardless. But I'm going to show you guys why the odds of that have slightly fallen. So here's a 30-minute chart of the SPY, and they've slightly fallen just a little bit because we had an end of day rally. So obviously this end of day rally does not compare to the prior end of day rallies, but when we did rally at the end of the day heavily, they were almost always sold off. That didn't happen on May 2nd, but that happened on the 4th, sold off. That happened on the 28th of April, sold off. And that also happened over here on the 25th. We sold off. So what I would have rather see is this strength basically not fall back down and retest the lows. I would have wanted us to chop around at the top, at the highs basically, and create a nice solid, bull flag. The fact that we had some short covering at the end of day is basically the only reason why I'm a bit worried about upward movement. Okay, so that that's basically one of the main things. And now when looking at the SPY's daily chart, this looks much better than the NASDAQ's daily chart. Let me go ahead and clean these things up. All right, so on the SPX, we closed green for the day. Not, obviously not compared to where we opened from yesterday's close, but we opened and we closed higher than where we opened. All right, so that was one of the conditions that we needed to meet for today. All right, and we ended up doing that. So now on Wednesday, we have CPI data coming out as well. And CPI data is very, very important for where the stock market is going to be. So depending on that news, it's going to be very, very important. And that's on Wednesday. So we could still have a bit of a relief rally, a bit choppy movement into Monday and Tuesday. But then after Wednesday, it's going to be very, very important to see, which direction the market is going to go. But regardless, I'm not overall bullish on the market. I do not think that the market can make new highs from here. If it does, great. But what I personally think should happen is even if on Monday and Tuesday we bounce back up, break above 416 on the SPY, retest 420, those are good shorting opportunities, because the market, to have a healthy, sustainable bounce from these levels, in my opinion, need to have another either retest at least 400 or break down below 400 and retest 395 to 390. From there, so it should go something like this. And then from here, basically, is where it would be much better to go long. But at the moment, all of these moves to the upside have just been completely sold off. None of them have sustained. Powell is actually very, very hawkish. It was basically like a backhand bullishness from what he said during the Fed meeting. He was saying that there's going to be a soft landing. But he also said that there wasn't going to be a 75 basis point hike, but there's going to be a soft landing. So that's not bullish, guys. So there's still a lot of bearish things left. And the only reason why we would have a bounce back up to 440 to 450 would be when shorts and going short is not as good of a risk reward. At the moment, it's a really good risk reward still. And any bounces that we have are good shorting opportunities. We need to have more lows. Now, for example, this was September of 2020. I was showing how this would be the most bearish case in terms of not bouncing properly, right? So even here, we ended up having a lower low, and then we would rip higher. Back here, we were looking at how, we were trying to look at the March 2020 bottoms. We had a bit of a bounce, sure. We had another bounce, but then we made another low here. We got everyone fearful. And then from here, that's when the market started to bounce. So in my opinion, this is not a sustainable bottom that we see in the NASDAQ and in the stock market in general right now. We need to have another low. This is not strong enough. I mean, even when you look at the weekly candle, this is not a strong weekly candle. Look at how feeble and just weak it looks. Like, how is a candle looking like that supposed to stop the upward momentum? The downward momentum. It can't. There's no reason for it to. This is a skinny, small little candle. Like, it's not sustainable. Even back here, when you see a small little candle like this, we saw more downside, regardless of where we closed. Over here, this wasn't a good wick. Back here on end of January, we bounced, sure, but then we ended up making new lows. Same concept. The bounce above 416 to 420, in my opinion, are good shorting opportunities. But I do think that we should bounce Monday and Tuesday. Sure, that's fine, but I don't believe they're going to be sustainable. Look how disgusting this candle is. Like, look at it had a high of 429.66, a low of 405.02. Like, are you kidding me? Like, this is not, this is not a, a sustainable candle. There has to be more room to the downside. Sure, next week can be slightly green. That doesn't mean anything. Keep your eye on the price. Until we break back above 433 or 430, then, there's no reason to be completely bullish on the market. At the moment, the momentum is still falling. We should make new lows. And now I want to give you guys the bullish case for why I think we could see a bounce Monday or Tuesday specifically also. One other thing is the 30-year bonds are extremely oversold here. So let's take a look at the daily candle. They're extremely oversold, overextended to the downside. And this is a good sign for a potential reversal in growth. So the NASDAQ, okay? So yes, we could have another down day, but a potential rally into the CPI numbers is also, it's highly probable. All right, but regardless, this is not a sustainable bottom. This is not a overall bottom in the market. I would love for another leg down. I would love for another leg down. I would love for bears to get very, very overzealous. Right now, I want bulls to become very, very overzealous and feel like this is a bottom, only to have their faces ripped off, brought back down. And then I want more people to be bearish. Oh my God. I want people to become super bearish below 400, like completely, let's just blindedly bearish. Once people become blindedly bullish, that's when you go short. And once people become extremely, extremely bearish, that's when you go long. And it's been working out pretty well. So there is that for my thought process on the stock market. Let's take a look at the crypto market. So obviously Bitcoin does not look bullish, right? We need a break above 36,500 basically. We're still trading below this trend line. Things are very overextended to the downside. It doesn't look great, obviously, right? But the only bullish thing here is we made a new low and held it. So in the crypto markets, usually this is like technically this is a sign of a bottom usually, because bottoms in the crypto market aren't always held as perfectly. People can be looking at this as a stop loss hunt, but the odds of us falling even lower is still there. All right, but in the short term, in my opinion, the stock market should be still bouncing Monday and Tuesday. I don't know about Tuesday, but Monday, like still 85 to 90% chance that we bounce. But then any sort of strength or over strength that we have, especially if we can't break above resistance, beautiful shorting opportunities. Keep your eye on the prize. Do not get overly committed to either position, because there's so much money to be made intraday scalping both ways. So don't give half of your money away. But overall, the momentum is still bearish. I hope I did a good job explaining everything. I hope you guys have an amazing weekend. Make sure to join the Discord server where I share all of my thoughts and ideas and everything. It's completely for free. You guys can join. The link is in the channel description. Go ahead and send me a message. And again, thank you so much for all of your likes, comments, subscribes, shares, all that good stuff. And I will see you guys tomorrow or Monday. Thank you.